and trading research. Good morning, guys. Welcome to another beautiful day, and I hope you're having a great one. This me, I'm B2B, and this is Mark Putrino. How are you this morning?
Hey, I'm good. How are you?
Wonderful.
Alrighty, so what is going on? Looks like another pretty weak day in the market because Biden's going out to picket with the team or the union people out there.
Excellent.
Wonder if he'll even be able to lift up the sign.
I doubt it. I watched again. I was watching Sky News Australia smash him around a little bit about doing the crucifix in front of Netanyahu and how he just blew off De Silva from Brazil the other day. It's really kind of just shameful how it looks.
You know, he came to New York too, and he didn't even meet with the mayor. You know, the mayor.
Are you serious?
Yeah, and the mayor is obviously a Democrat, but because of the migrant crisis, it's just like getting out of control, man. You know,
what is that about the average?
They're So how would they get this wheel? How much does this wheel weigh, you think?
Well, no, it weighs 85 pounds.
Oh, that's all?
Yeah.
Oh, okay. I thought it would have been more.
No, they don't do a whole lot, Mark. They basically just keep the track in suspension. So you have these torsion arms in there, and that wheel sits on the torsion arm, and the torsion arm pushes the maximum pressure is against the rubber part of that, and that torsion arm pushes it down against the track, so it makes the track stiff. And then you have a giant. Well, I probably can't tell you that, but there's something in there that holds everything tight, and it pulls it down and straps it back, so so that it doesn't. So that it tightens everything down, but that just it's very easy to do. Those are not hard to deal with at all.
Well, you know what kind of gets me? It's like, why the hell are they doing this now? Like, why don't they just do something? You know, it's like, why didn't they just do this a year ago? It's just,
well,
and then
this is over.
You got to start thinking: Are we really giving these people all this money because they can blackmail Biden because of charisma?
Yeah, I mean, Mark, this war's over. It's been over. They haven't moved. I think they've moved 300 feet since they started their spring offensive, and it's October. It's not happening. This war's over. They should have gone to peace back then and just gave Putin what he wanted, I guess, because nobody wants to stop him from doing what he's wanting to do. But you can't do it the way we're doing it, because all we're doing now is just funneling money out of this country, going to some place that we're not counting the money. We don't know where it's going to. We don't know who's getting it. And honestly, I don't know anything that's going on over there. Do you?
No. It's just it's like, in my opinion, this whole war is friggin' Trump derangement syndrome. You know, it's they come out with all these lies about Trump, and and listen, if he was in office, this war would not be going on. So I don't care what anyone says.
Thoroughly agree with you.
Yeah. All right. So let's see what's going on here. After FTX crashed, the world of crypto seemed to belong to the largest exchange, Binance. Less than a year later, Binance is the one in distress. Under threats of enforcement by U.S. agencies, Binance's empire is quaking. Over the past 3 months, more than a dozen senior executives have left. The exchange has laid off 1,500 people. Wow. You know, this really is a sign of just the psychology of investors. I mean, probably what was it, maybe 3 years ago? Like, that's all you heard about was cryptocurrencies, right? Crypto this, crypto that. Crypto's going to change the world. And now it's like, I never hear people talk about it anymore. There's Bitcoin and there's Ethereum, and probably been thousands that have gone out of business. Well, let's see. So here's Bitcoin. And what's interesting is when we look at whatever security we look at, whether it's crypto or it's a bond or it's an ETF or if it's a stock, we see these same principles going on here. Like here we have our principle of fast move higher, fast move lower, fast move higher, fast move lower. We can see that we got resistance down here that turned into support over there. And there's another fast move. right? And it's because we're looking at charts of human psychology. Forget about that it's the Bitcoin chart. Just look at it as it's the chart of the psychology of the people that trade Bitcoin. So you can see here we got our support level converts into resistance. The reason why we get these fast moves down is because one of the main reasons why we get support is because we have remorseful sellers trying to buy things back. And in this case here, when you move through these price levels really, really quickly, there's not a lot of time or a sufficient amount of time for this kind of vested interest to build. So eventually, if the trend reverses and comes back to those levels, we can move right back quickly, right back through it. Because the sellers come in and it's like, hey, where are all the buyers? There's no buyers around. So this causes a fast move lower. So a fast move higher. Then when we reverse, when we get back to these these levels, it's a fast move lower. As a matter of fact, that's what I did at my that's what I did my last lesson on last night, was the moves. All right, so let's see what's going on here. We'll go take a look at the S&P.
Did you see that text I sent you last night from Heather
I don't think so.
about MDGL? You got to look at this chart on the daily, Mark.
Oh, okay, I see it now. And I see my daughters don't respond to me. MDGL. I only hear from them when things are going bad. I guess if I don't hear from them, that's good. Madrigal Pharmaceuticals.
Yep.
Yeah, wow, look at that. Yeah, so a lot of times when you get these like pharma or these biotech companies, moves like this are not unusual because they probably announce that they just passed some kind of trial or something. But it's the same principle, though, right? If this news isn't as good as people originally thought, and apparently it's not because the stock is way down, then there's going to be no one in here who sold who's going to be trying to buy their shares back. Oh yeah, look at this. So you get kind of the same thing over here, right? And look at where it hit resistance. So despite whatever the news was, the print market principles kind of trumped the news. And as we can see here, we ran into resistance at pretty much the exact same level that we did back in July of 18. So that was 5 years ago. So this is a really good example of our market memory. You know, from 5 years ago, this level is still important. Now, is it that there are people who bought back here who held on for 5 years who are trying to sell? I mean, I don't know. It seems like a long time, but the chart doesn't lie, right? I mean, you can see that it's how precise that is. And then you can see over here, we got our rapid move up and a rapid move down. So it looks like this thing would probably keep going, although I'd probably look for some kind of support, like around here. See this clear resistance here, coming over here. So that would be, let's call that the 138 level. Where is it? 145 in the pre-market. Then I would say the next stop, if it breaks that, I'd be looking. All I'm really doing is looking for former peaks here. So this one would be like right there. So that's 105. But yeah, so this is an example too of, you know, you got to look at this through the prism of psychology. Like, what happened between here and here that made the company, you know, go up 5 times in value or whatever, and now all of a sudden we're down by 50% from where it was, right? But has the news changed, or was this first move an overreaction? So that's my guess. This move that it made in December was probably an overreaction, but this was a while ago. I guess things could maybe things have changed and new news has come out. But this is why I don't really pay attention to the news. I'm more of like, let the charts tell me what to do. All right, so let's go back and look at our S&P. So the market has been looking weak, and I have seen anything. I haven't seen anything that would make me change my mind on that. See, we've looks like we've kind of broken this support at 433. We're trading below it down to 431. Yeah, so big move like this, no comeback. That's kind of well, it's something that we would call bad action. So you got people who sold here and who sold here, and when the price goes higher, a lot of the people who sold tell themselves, I made a mistake. If I can buy my shares back at the same price I sold them at, I'm going to. So you get these remorseful sellers trying to buy their shares back. But now that support is broken. And what does that tell us? Well, it tells us that the investors or the traders who created the support with their buy orders have left the market. So anytime you get demand taken out of the market, could set the stage for a move lower. Now, remember, we were looking at a bunch of different things that are all sitting right on support. So our technology sector, see what that looks like. All right. So yeah, so this is sitting pretty much right on support. And now it's going to be another day that it looks like it's kind of flat. But the longer we stay here, the greater the odds are, I think, that the support breaks. Because a lot of times when you get to support, you get these moves like this where you just kind of rip right off of it. Right. Here, we've been down here for 3 days, and it looks like today's going to be the 4th day where it doesn't look like it's going to break today, but it's not rebounding either. So, see, a lot of times when you get to support, you get these rapid moves higher. It's like here, we're there for a day. Here, we're there for a day. Here, rips higher. So when you get a situation like this where you get to the support and the sell-off pauses, but there's no reversal, I would say that the longer this takes, the greater the odds that it goes down as opposed to reversing. All right, so that's that. Now, remember, the financial sector was sitting right on important support as well. And this, look at this. This is the 3360 level, and look at where it is in the pre-market, 3360. Man, my house has had this like invasion of fruit flies. We got some.
Man.
Yeah, it's like they're everywhere. I guess
that sucks. I've had that happen before. That's miserable.
Yeah, they're like they're so little. I don't know. They must have come in on some kind of some fruit or something that we got.
You can go down to the hardware store, Mark, and they've got these little clear plastic bags that you put water in or something, and it's like got a nectar in it, and it attracts all that stuff, and they'll go into the bag, and then they'll drown. Well, and for people that don't want to kill a bug, they'll drown, and then you just throw the bag away.
Well, I mean, their lifespan is probably like what, a couple days anyway. But anyway,
if they're producing 3,000 every time they live, I mean that's 3,000 more. But you do.
Yeah, I hear you. All right, so now here's our financials, and now this looks kind of weak to me as well because we haven't had any kind of a rebound, and we got the lower high here. See, this high was here, and then this high is here, so that's kind of our descending triangle type pattern. And yeah, so you got tech and financials are each sitting right on crucial levels. So I'm just thinking about the percentages. So that's probably about 42 or 43% of the total market. If we just look at the market caps. So support back here turned into resistance here, and resistance here turned into support over here. So the question is how could this seemingly happen? Oh, and here too, notice the higher lows, which told us that this move was coming. Higher lows going into support. Higher lows going into resistance. There's a good chance the resistance breaks. So support over here becomes resistance here because you got the people who bought back here who thought that they were, all that, these great traders when the market went higher. Now, assuming they didn't sell, it goes back down here. And now all of a sudden they're underwater. And a lot of them tell themselves, hey, I made a mistake. I want to get out of this thing, but I'm not going to do it if I'm going to lose money. So I'm going to wait till the shares get back to my buying price, and then I'm going to sell. And I can get out at break even. So you get support turns into resistance. Now there are people who sold who, when the market goes lower, they thought that they were great traders, but then the price moves higher. And a lot of them tell themselves, hey, I made a mistake. If I can, I'm going to buy my shares back. So you get remorseful sellers placing buy orders at the level that had been resistance. So when we look at these charts, it's all about psychology. Buyer's remorse turns support into resistance. Seller's remorse turns resistance into support. If you look down here, look at this support level, right around 30.30. So seller's remorse can keep support intact for a long time. Buyer's remorse can cause there to be resistance at former peaks, like here, right? If you don't consider the psychology that we're looking at here, I think it would just really kind of be impossible to understand these charts. So let's go look at the bank stocks, which are part of the financial sector. And this is the bank ETF, KBE. And all right, so this looks, I mean, it had a little bit of a move higher yesterday, but it doesn't look like it's holding. It's giving back about half of its gains this morning. So this looks like it has a ways it can go. Now, the big thing I think that's driving this weakness are these interest rates. See where the 10-year yield is. Yeah, so look at that. We're up to 4.54. So that's low. That's the highest in a long time. This could really start to kind of accelerate because you got to remember what we're looking at here is the inverse of the bond. And if you can imagine, then this would be support. And now that we've broken support, there's a good chance that this could keep going. I mean, look at that. That's a pretty big move. So I have a hard time seeing the market really rally with interest rates doing this.
I look at Zillow a lot, and there's not a lot of movement yet. There's some price reductions, but a lot of people are still holding tight, but nothing's selling. You can see the map just filling up with dots.
Down in Florida?
Yeah, well, everywhere. Just places that I might want to live, places I might want to buy a piece of property.
Yeah, one of my good friends finally decided to move. He's either going to go to California or North Carolina. I don't know why. Well, I know his wife has friends in California.
North Carolina is nice.
Yeah, I'd rather go there. I wouldn't want to live in California.
And they've got the tech triangle there now, and it's like Asheville, Charlotte, and Richmond or something like that is now the tech triangle where Apple's moved in there. So there's going to be a lot of newer opportunities in that area in the coming future. It's actually kind of nice there.
Yeah, maybe I'll go there. I mean, my daughter's in Virginia or in Arlington. All right, so here's our healthcare sector, and we can see that there's support down around 129. So we're down a little bit this morning, but this doesn't look to me like it's going to come roaring back anytime soon. So this sector looks kind of weak as well. Now we can go look at our. Oh, you're in North Carolina or Arlington? Yeah, I want to go somewhere. I don't know. I'm just kind of, want to just see the world from a different viewpoint before it's.
Man, listen, different sunsets are amazing, Mark.
Yeah.
Gives you a different perspective on life if you spend some time in different locations.
Yeah. No, I totally want to go somewhere. My wife does too. She doesn't really, I mean, she doesn't really have any family. Her mother's out in Arizona. Her sister's out in Long Island, but we don't really ever see them anyway. But this is also here now we have our consumer discretionary sector. This is also sitting on important support. So we got financials, tech, consumer discretionaries are all at support. If this support starts to all kind of simultaneously give away, we can have a pretty big move lower in the S&P. So that would, let's see where the S&P would probably end up. I mean, I don't really see much in here. So yeah, so we could be setting up for a pretty big move lower if these things all simultaneously break their support. And I think we probably will, because if there was going to be some kind of a rebound, we would see it, I think, by now, and we're not really seeing anything. This here too is even kind of teetering right around important support. This is our communication services sector. All right. And now we'll look at the industrial sector. And this too is right at support, right? So a lot of the market is sitting right on support, and it could rebound, but I think with interest rates moving higher the way they are, my guess is that the support breaks and it goes lower. What am I missing?
You look at healthcare?
No, I did. Yeah, I looked at healthcare. Maybe I'm not missing anything. All right. Well, actually, let's take a look at the energy sector. Well, like we said, oil was going to get up to about 93 and then kind of roll over. I mean, look at this, right? We got up here, and This is an example of if you're long something and it's moving higher and you're wondering where to sell it, well, you can let the market tell you what to do. And if you see that, oh, there was resistance back here around 93.50, there's a good chance there's going to be resistance there again. Look at to where we got here, like within pennies. So remember, you got the people that bought back here that are trying to get out over here because they buy and then they start to lose money and they go underwater. And then when we get back up here, you get these remorseful buyers trying to sell, and this puts a top on it. So you can see it's really kind of extraordinary. And this goes back to the whole psychology thing, because you got this sector here that's worth trillions of dollars. This is an ETF that tracks a sector. So how is it possible that the sector has such precise valuations at such different time periods? All right, so then we can kind of say the same thing about oil, right? It's you got this huge worldwide market, and yet somehow these laws or these principles of support staying intact, resistance, support turning to resistance, they're all there. And if you just think about it, like how big the oil market is, right? All over the world, you got all these like freighters out there and all these wells and this, that, and the other thing. Yet somehow you get these really, really precise levels. And why is that? Well, that's because you have human beings trading it. And what we're looking at is this chart is the psychology of humans. Our buyer's remorse, our seller's remorse. TSLY 60% dividend. I can take a look at it. TSLY. TSLY.
It's under funds.
Well, I mean, if they're going to pay out that big of a dividend, then they're going to, there's no such thing as a free lunch. So they would mark the stock down by that much. Would be my guess, but I don't see the news here. Yield Max Tesla Option Income Strategy ETF. Down here, it doesn't have a dividend. Last payment 58 cents. Yeah, I mean, I think that if they're going to pay a 60% dividend, the price of the shares is going to go down by the equivalent amount. They would just mark it down. So, you're gonna get the dividend, but you're gonna lose on the price of the stock. So that'll end up being kind of a wash. But I'm not really familiar with this. Yield Max Tesla. Never heard of Yield Max. Let's see. Yield Max. Yield Max ETFs. Options for income. Let's see what we got here. Distribution rate. Yeah, see, these are distributions. Which is a little bit different than your traditional dividend. Like a traditional dividend, companies get, when they have profits, they send out the dividends to their shareholders. But this is, I would really have to look into it a little bit more. But a distribution is, all right, well, we got $10 a share, and we're going to do a $5 distribution. And here's your $5. And by the way, now your share, instead of being worth $10, is worth $5. So that's what's going on with that. But I'll look at this more later, and I'll be ready to talk about it some more tomorrow. For Yield Max ETF distribution schedule. Record date, payment date. Yeah, so it looks like every month they do something. I don't know. I'm gonna have to look at it a little bit more because it's not something I'm familiar with. But I'll check it out. All right, what else have we got to look here? Oh yeah, we want to watch Apple and that 175 level, as we've been talking about. $175, yeah. So this is like a really important thing here to watch in the market. So like if there was one thing I was really going to focus on, it would probably be this. But if Apple starts to break down, then that's going to bring down the tech sector, and then that's probably going to just kind of spread through the rest of the market. And one of the things I'm looking at here is you notice the lower highs. Like you got this high is lower than this high, and then this high is lower than this high. All right. So when you get these lower highs, markets go in peaks and valleys. And when the peak forms at a lower level than the prior peak, we call that a lower high. And the reason why this is important is because it could mean that the sellers are getting more aggressive. The buyers are kind of just hanging out down around here, but the sellers are kind of getting more and more anxious. So they're willing to reduce the prices that they're going to sell at. So you get complacent buyers and aggressive sellers. It sets the stage for a move lower. All right, so that's Apple. I guess we could look at Tesla while we're at it here. What is going on with Tesla? This is looking a little on the weak side as well here. Yeah, well, whatever. Markets go up, markets go down. You know, people seem to forget that.
Pardon me.
Oh, there's Jamie Dimon. I haven't seen much of him lately.
Yep.
I don't know. He kind of annoys me. Remember he was talking about the economic hurricane that was coming. Popular Treasury bond ETF crashes to the lowest level in more than 12 years as yields surge. All right, let's see what the popular ETF is. But of course, this makes sense. TLT. Let's look at TLT. It's a covered call strategy. Okay, yeah, I'm gonna look into that a little bit more when we're done. Wow, look at that. This is in a free fall. Jeez. Yeah, I mean, that's yeah, I don't know. You know, it's like we got all this inflation and they're just not doing the right thing, and now they want to spend even more money. And
But let's stop for a second, Mark, and talk about this and just how self-inflicted this entire bloody pain is. If we stopped with the political shenanigans and we just let the economy be the economy, that we'd be rolling right now.
yeah, well, if we had a competent president, that would help a little bit too.
Yeah.
See, the guy was at the Congressional Hispanic Caucus, and he started talking about the Black Caucus. Like he doesn't even know where he is.
Did you hear him honor LL Cool J and then say, "Boy, that boy, he got big arms, bigger than my
he calls
thighs."
him, you know,
Called him a boy, man. I mean, come on. Listen, that word and the way that it's used by people like Biden is a derogatory term. I'm sorry, it just is. It's always been that way.
well, he's a racist. Remember when he said that Barack Obama was the first clean African American in politics?
Mm-hmm. I know.
I mean, when he said that you can't go into 7-Eleven if you don't have a slight Indian accent.
Yeah, he knows what it's like to have cockroaches roll all over him before the kids used to rub his legs. I mean, weird dude.
Yeah, well, he's not an honorable guy, man. You know, he could have just retired 3 years ago. We wouldn't be talking about him, but now it's like he was like, oh, you know, I've been waiting for this for 50 years. It's my turn. I know there's a good chance that all this dirt can come out, but I don't care. It's my turn to be president, right? So instead of him just going off, I mean, think about it. And I tell this to my Democratic friends. It's like, this dude was Barack Obama's vice president for 8 years, and Obama didn't endorse him. He picked Hillary Clinton. You know, it's like, I'd have to go through it, but I wonder how many times in our country's history that the vice president didn't become the de facto person to run for president when that president's thing was over.
Maybe
yeah, well, I think
T. Agnew.
for that. One is he knows that Joe is incompetent. He even said never underestimate Joe's ability to F things up. But the other thing too is Obama is being the narcissist that he is. He's worried that how all this is going to taint his legacy, because it's like, all right, well, your vice president was taking all this money. Like, what were you doing? You had to have known, right? But he looked the other way. I think that because Obama came out of the Chicago scene where politics are really crooked, I think he kind of just accepts that stuff like that goes on, and you just turned a blind eye to it, right? Instead of him saying, "Hey, what are you doing? Why are you sending how did your son end up on the board of a Ukrainian gas and oil?" I mean, it's almost comical. It's like
It is comical.
it's like, how does he end up on the board of a Ukrainian? Does he speak the national language of
Mark,
Ukrainian?
how does Hillary come out this weekend and say that Russia is going to interfere in the election like they did in 2016? Did you see her with Jim Psaki?
She's delusional.
No, she is the problem. She's a horrible person.
Yeah, well, she's the one who came up with decided to do the whole Russian collusion thing.
Yeah, and then now she's out doing it again, and now we're going to put Trump in jail or in prison for saying that January 6th was a stolen election, and she's still going around saying that her election was stolen when she was just a bad candidate with bad baggage.
Yeah, well, you know what? She might be evil, but she's not stupid. So, I mean, if she was president instead of Biden, probably wouldn't be having the same of the problem.
No, we wouldn't be in a war because she's tough.
Yeah, yeah. Well, I mean, hey, listen, the country got what it deserves, right?
Absolutely.
You vote in this guy who says, "Oh, just come over here. We're going to open the border. Just come on in." And now it's like you got all these problems. You got in New York, everyone's going crazy because, like, there's this one area that's somewhere in Staten Island, which is it's like a nice area, and there's like a park there, and they put in all these tents for the immigrants to live in. So all the people who live there now are like, you got kids, and like, you don't know who these people are. They're not vetted. They have 3 cases of tuberculosis now. I mean, who the hell gets tuberculosis? At least no one in our country does. You don't know if they got criminal records. It just is like hard to believe how bad things are.
We already discussed a month or so ago about the tuberculosis in the beef in Texas now because of the tuberculosis coming across the border. And Texas had been tuberculosis free for like 50 years. And now they got tuberculosis in the beef again. So they got to kill all that cattle. You can't eat the meat.
So it jumps from humans to cattle?
Yeah, tuberculosis does. It's a respiratory thing. Hey, we got some bros talk going on over here. Yeah, see, and Sniper here says that there is such a thing as a drug-resistant TB in Mexico. So we're just bringing it on through. On trains now.
Yeah, it's like you would think it's like the president's main job is supposed to be national security, right? And it's like if you don't have borders, you don't have.
That's the only job of the government is to provide for defense and to provide for the infrastructure. That's all they're supposed to do.
Yeah. Yeah, he's just a disgrace. Remember, he was checking his watch when they bring in all those dead service members home. All right, if I was looking at bros, I would be looking at this probably like right here. See the opening price here, and then the low price here is like right around 20. So what is so I would probably be looking at this. Remember, most volume trades on the open, so that's where the open was. So that's 22.76. And I guess we're pretty much almost there. So the next thing I would look at is probably whatever the low trade here was, 20.05. So those are what I would be looking at there.
Well, that thing's come down a lot. It IPO'd at like 50, I think, or 38, 35. There it is.
Oops. What am I doing here? Yeah. Wow, look at that. It had a nice little run, but now it's going the other way.
It's good coffee too, man. When I lived out in Washington, you would drive down the corner and Bros would have, or Dutch Brothers, which is who it is, Bros, would have a string of cars double wrapped around the building every morning. Crazy. And then they went live, and now I don't know what's going on.
Really? Huh.
Yeah.
I don't really drink coffee, so
I did out there just because it was everywhere.
see what the coffee futures look like here. Coffee futures. I guess it's this one. Oh, the price has come down a lot. But even here we can see our same thing, right? So this now we're talking about coffee, and we can see the same price action that we see in the other charts we're looking at. Like right here, you got your support turns into resistance. And here you can see we've had support. We've been kind of hanging out right on the support here. It's pretty amazing how this stuff happens, but it does. I mean, it doesn't seem like it would, but if you look at the chart, the charts don't lie, right? So support here became resistance over here.
You would think that as much coffee is drunk in the world, that would be a consumer staple. A coffee maker, but I guess it's a commodity.
Yeah, no, this is the commodity.
Yeah.
Look at that. Even here you can see support from here became support again. But again, it's that there's people that are trading this stuff, right? So it's what we're looking at is the psychology of coffee traders. So resistance becomes support. Because if it wasn't for psychology, there's no way that this phenomena should happen. It just, like, how is it that coffee has the same value now that it did back in January? And the answer is, it shouldn't, except for the fact that it's the psychology of the traders that's driving it. Let me go to how far back this goes here. Wow, look at that. It goes all the way back to 1974. So this is kind of typical behavior in these commodity markets when you see things like this, because what happens is if you're a coffee grower and the price gets really high, well, what do? You grow more. So this is like real supply and demand type stuff here. Price gets high, brings new sellers into the market. Price gets lower, people stop growing as much. That pushes the price higher. People start growing more. So you see this a lot in commodities. It's like these cycles. So this is a pretty good example of it here. But if you think, right, well, I don't know if this is inflation adjusted or not, but coffee's like the same price now that it was back in 1976, I think. But yeah, so that's pretty neat. So let's see, wheat is down. What is wheat? ZW. There's another fast move up, fast move down thing here. Yeah, so same type of thing, right? We get our fast move up, fast move down, and then you could even get the fast move up here and the fast move down there. But now it looks like we're broken support. So this is probably going to go lower. See how support has started to convert into resistance? If something doesn't break support and make a rapid move lower, what happens is that sometimes you get this. It breaks the support, but then the support turns into resistance, and that sets the stage for the next move lower. So see how support here has turned into resistance there. So I guess if you're not a futures trader, you could always look at the wheat ETF.
Mark and Avi's asking about TOST when you get done with that one. Toast. Yes.
Yeah, so I mean, you can see it looks pretty similar. Trades a lot of volume. Toast, TOST, like breakfast toast.
That's Toast Incorporated. That's the name of the TOST.
Oh, really?
Yeah.
Oh, what do these guys do? Software.
No, I never heard of it.
All right, so what's it doing in the pre-market? Really nothing. Let's just go through this a little bit here. Now, I would be looking, I mean, as a trader, you got to just kind of assume the trend will stay intact until it doesn't. So if I was looking to buy this, I would be thinking like right around down here. See this former little top in here? See, so support there, turn into resistance there. And I mean, it's almost there. So this line is, let's see here. So this line we're going to say is 1820. But we don't want to buy it just because it's down, it's at support and it's oversold. It makes sense to wait for things to reverse if you're going to buy them. But considering the market, there's probably a good chance that this support breaks and it goes lower. I mean, if it, put it this way, you have these like things that kind of funnel through the market, right? So if Apple starts to break that 175 support level, that's going to put pressure on the tech sector. And this in turn is part of the tech sector. So that'll put some pressure on this here too. So this is kind of similar to what we saw actually with the tech ETF, right? We've had, so you look at the similarities. So I'll bring up the tech ETF here. All right, so see how they look kind of similar? Like they've sold off and they've gotten to the support and they're just sitting there. I mean, they're not exactly similar, obviously, but this is the sector, so this is going to have an influence on Toast. So my guess is that this support breaks, but if I was considering buying this, I would tell myself what price level could be surpassed that would make me think that this reversal is underway. And if we go to our 5-day chart here, I would say, where are we now? 18. I would probably look right up here, like 1910. So if I was going to buy this, I would wait until it got above 1910 because it could still keep going down. But if you wait for it, there's a good chance there's going to be some resistance at this level here because there's people who bought right at the bottom here who want to get out. So this might put a top on it. So if we got above that, that would tell me, oh, all right, well, the resistance that's there, the people that were selling are out of the market now. So this could put a ceiling on it. So I would wait for that reversal to start. That would be my take on that. Fixing the rain. And all right, Mr. Steven. Yeah, it's raining up here. It's been raining for like friggin' week, man. 8:40. All right, everyone. I guess if no one else has any questions, I'm going to hit the road, but should be around tomorrow. And I guess I'll see you all then. Thanks a lot, everybody.
Have a beautiful day, guys. And listen, we've got some exciting things coming from stockmarketjobber.com. Real good information. Good things coming. Thanks. Have a great day.